What is up, everybody? Coming to you with the next episode of MACkED, the podcast that here exists in Clinton Township, Michigan, between ROIG, Royal Oath Insurance Group, and MACkED Associates, powered by eXp Realty. And today we have on a very special guest, a roommate of ours from Caliber Home Loans, James Taveggia, and your team, Chris. What's your last name, Chris? DiFiore. You must be Italian or something,
we got a couple Italians in the building.
Nice.
A couple paisans.
Yeah. And then, of course, regular person here on the podcast, Dom Check, specialist over at Royal Oath Insurance Group. But give people a little bit of an intro. Who are you guys? What is it that you are passionate about when it comes to the loan side of things? Just give people a little bit of an intro about you guys and what you're all about.
Yeah, cool. So Team Taveggia, we essentially started in August of 2020, and there's three team members total that originate underneath me. So there's 4 originators. We have 2 assistants, and I guess if we specialize in anything, it's financing, right? So first-time home buyers, we work with MISHDA so that people are able to get grants with down payment assistance, all the way up to I'm buying a $3 million home, and in the jumbo world, we have a lot of non-QM products. We do everything. So, I mean, if you're going to ask what Team Taveggia is about, bottom line, we just want to provide the best customer service experience we can. I've got an 18-year history of doing this. None of the people that I brought on to my team were loan officers, and that was intentionally done. I just hired guys that were good people that I knew that I could teach the trade, and they've all kind of developed, and they do a great job. And together as a team, we do pretty awesome together.
Yeah, right on. You guys are you guys are ranked nationally. I know you're going to jump on your Chris and just share kind of your background too, but you're ranked nationally, not just here in Michigan, but nationally. You guys are one of the, what were you at in the United States here?
So there's approximately 308,000 loan officers. Last year, we ranked number 492.
492 out of over 300,000 loan officers in the United States. That's wild, man.
It's pretty
Congratulations, nuts. Dude. That's
not bad.
Thanks a lot.
Yeah,
I got a good team behind me, guys.
Heck yeah, you do. Which, speaking of Mr. DiFiore,
yes,
Christopher DiFiore.
That's right.
Tell us a little bit about you. What brought you into the finance world when it comes to providing awesome customer service and loans for people?
Yeah, so I've always had a finance background, studied finance at The Ohio State University.
The Ohio State.
Don't hold it against me. But ever since then, I know James since 2017, finance background, graduated the finance degree. Was in the private equity field a little bit. Heard James was building a team. All he had to say was, "Hey, I'm looking to bring you on." I said, "Hey, I'm all in," because knowing James' 10 years knowledge in the industry and just him being like the best person I know, I jumped on the opportunity. Joined in October 2020, right when we were starting the origins of the team. Derek had already been around. Joe, his brother, came on as well. And that's kind of how we started formulating Team Taveggia. But yeah, just the ride since 2020 and the ups and downs have been a great experience. And I'm just happy to be here, man.
Yeah, that's awesome. That's a 492 in the United States, but number 1 in Chris's heart.
That's right. That's not.
That's awesome. Right. So speaking of the ups and downs, kind of crazy thing that's happening in the market right now. I'm hearing people losing their minds over the market crashing. I know you guys are probably hearing this too. Like at least I talk to people on a regular basis and they're like, "No, I'm not going to do anything right now." Cause we've had 2 consecutive quarters of the market going into a recession. We're in a recession. It's only a matter of time until the bubble bursts, and I'll be able to buy this house at 75% off. Like, that's what I'm hearing from your guys' perspective, though, on the loan side. And Dom, jump in on this too, because I know you've got a lot of buddies and stuff buying houses as well. What is it that you're seeing? You've been in this business for almost 20 years now, almost 2 decades. Is this something that are you seeing kind of the writing on the wall, like it's coming, or what's your perspective on this, guys?
So I don't think that the market's going to crash and burn by any means. I think the market's needed a correction for quite some time. I mean, it's simple economics. There still is not enough inventory with the demand that's out there. You're starting to see some of these pie in the sky numbers that people were throwing out there, because why not? That have been able to get them for the past couple of years. So I'm on a real estate list, right? I've been looking for a home with my wife since March of 2020. And the one thing that I'm seeing right now for the past couple of months is some of the homes that we initially saw, you're seeing all these price decreases coming. I don't think that's an indication of the market falling apart by any means. I think that's just an indication that people aren't willing to pay the crazy offer prices and do these, let's just say deals where we're waiving inspection. I'm not saying that those things aren't still happening, right? At the right price point in the right area, there's still multiple offers coming in. But I think it's slowed down a lot. I don't think people are necessarily trying to kill each other to get into the same house. I think there's still, a handful of buyers for each transaction per se, but you can't just throw a piece of real estate up there with this pie in the sky number and get it at this point. There's got to be a little bit more substance, a little bit more to it.
For sure. Yeah. Chris, what about you?
Yeah. I mean, you see right now that about 10% inventory is in the last month. Inventory has gone about 10% up, but sales have decreased about 5%. So it's that correction, kind of what James was saying. So you see it not only in the data that you see across America, but also I'm just driving either into work, to the grocery store, anywhere from point A to point B. I'm seeing some of the same listings that are still there every time I pass by. Some are selling, some are not, but you can just kind of see it not only in the numbers and the data, but also just in your neighborhood. So yeah, I think that's a great point. And I think I think it's true to the fact.
For sure. So I actually just shot like 10 minutes ago. I did a Tuesdays with Roy podcast, which is going to be released tomorrow. But one of the things I did some research on it. It's exactly what you guys are saying. Supply and demand. This is my perspective, right? I might be completely wrong. We might all just be sitting in here and be completely wrong in 6 months, right? Like,
sure,
that's okay. I'm willing to admit it. But one of the things that I'm noticing is going along with what you were saying, the supply and demand aspect. We see it every day, and it's really easy for us to pinpoint the issue with other things, but the housing market is one that people have a tendency to ignore, right? Sure. Like the United States shuts off oil reserves. There's a lack of oil. What happens to the price of gas? It skyrockets. It doubles. You know what I mean? It doubles. It goes crazy. If you go back just pre-COVID, I was doing the research on this. This is nuts. You go back just pre-COVID, I want to say it was 2020, December or February of 2020, we had 50,000 homes on the market. 50,000 homes on the market. Today, there are only 32,000 homes on the market. So already, right off the rip, eliminate 18,000 houses, 18,000 potential residents for first-time home buyers. 18,000, you know what I mean? Like that, there's a massive housing shortage, and that is the reason why we're seeing this massive increase in the value of homes. It's going up. It's continuing to go up. And then I don't know if you guys know this, but California, they just announced for the first time in the United States history, we've seen a decrease in population in California. All those people are moving out of there and they're moving to other states. Some of them to California, some of them coming to Michigan, and they're coming with cash. They're coming with money. And now we're not seeing that output of California residents like we did in the months past. And we're not seeing an increase here in Michigan as well. So I think exactly what you guys are saying. I kind of agree with you. It's the craziness of high sales prices is going to start to taper off as we see an influx of more purchasers, and more importantly, an influx of more homes coming on the market.
Yeah, so, and I think also it's still the leading percentage is still first-time home buyers at 30%. And then, like you said, cash offers at 25%, investors, it's like 16%, and like less than 1% is foreclosures and short sales. But yeah, to lead it off though, 25% of that market share is cash buyers. Yeah, that's pretty strong.
Oh yeah.
Well, another thing too that a lot of people don't even realize, these companies have been around forever, but they've been more aggressive in the past couple of years than ever, is you actually have corporations that are buying up real estate now too.
Yeah.
And they are holding that asset because rent is completely out of control as well. And at the end of the day, if you're holding this potential asset and the asset pays for itself, there's no real liability involved. Now, 2008, right? That's the only market that you can compare when things really went haywire. But a lot of people say, is this going to be anything like 2008? I don't believe it's anything like 2008 because I lived through 2008, and people that had a credit score, a heartbeat and a pulse were getting mortgages. Like, people were getting loans that really never should have been put in a position to be given a loan in the first place.
Sure.
And although our programs and guidelines are opening up, the non-QM products are a real big force right now amongst the mortgage community, because it's allowing people that really should be able to get a home but don't necessarily qualify the traditional way. We're coming up with additional ways that are, quite frankly, safe.
Yep.
They're adding margin in as a result. These loans are not insured by Fannie or Freddie. They're investment products, but they realize that there's a market out there that's being missed, and it's allowing people to get into homes that really can afford the homes, but on paper, it doesn't look like they can. So we're introducing a segment of 2008, is what I'll say, back into the market. I think that self-employed clients are probably the largest topic of these types of non-QM loans. When you're self-employed, you have the advantage of taking every write-off. At the end of the day, it works against you in a mortgage, right? Because you're trying to file the least amount of revenue or gross profit with Uncle Sam, because you want to pay the least amount in taxes, but that's what we use to qualify you. So they've come up with some innovative ways to still be able to qualify clients on cash flow, percentage of income, without necessarily going through the full tax returns. And it's creating a new type of lending that we really haven't had in the past couple of years.
Yeah.
But I do believe that these corporations going up and buying all this real estate up out in California, New York, the more desirable areas, I mean, that's a problem too.
Oh yeah.
Because they're not buying these homes to necessarily put money into them, turn them over to another homeowner. They're buying these homes as a way to have a different asset collection, or a different way to ultimately invest money. And these homes are not going back to homeowners per se. They're going to families to be rented. It's kind of a crazy, unique time that we're in right now. And interest rates, right? It's always been the topic. I think people are becoming more and more understanding that, right now we're in a mid 5s to low 6s market, depending on the day, because it really is how it's going right now.
Yeah.
And it's very unpredictable, but you have a lot of people that were on the cusp of being qualified when you had a rate in the high 2s or low 3s. Well, now all of a sudden that principal and interest payment is doubled, and real estate may have taken a little bit of a turn in the negative. Maybe things are going for a little bit less, but not nearly enough to make up for what the cost of interest rates is.
Yeah.
And as loan officers, honestly, we welcome these types of things, because at the end of the day, we have to pay for gas, right? We're normal human beings just like everybody else. And the cost of goods, the cost of technology, the cost of gasoline, obviously, it's just more expensive to be a human being right now. Mm-hmm. It's more expensive to get from point A to point B. And the only way the Fed truly can curb inflation is to raise interest rates, because it makes borrowing less attractive. Mm-hmm. And it's unfortunate that there are people that are being pushed out of the market, but in the grand scheme of things, I think it's for the betterment of us as a whole.
Yeah.
And it's healthy.
And I think that if you're thinking about waiting also, I wouldn't wait if you think that the rates are going to go down, because they're still going to continue to go up. I think this is a big week for the Fed. We're going to see a good glimpse of if it's going to go up 75 basis points again going into the next quarter. But yeah, we probably won't know that till September, because it's all speculation, but it's going to be on the rise regardless.
Yeah. Are you guys seeing it from the insurance perspective too, from where you guys are coming from? Are you seeing an increase in rates as well?
I mean, yes, I would say whether it's home, commercial property, the cost to rebuild has gone up, and the premium hasn't gone up a ton, but the price to rebuild has gone up.
Okay.
But
just so that people understand too, explain premium, because some people might be hearing that and going,
so the
I don't know
premium
what
is
you're
what
talking
you
about.
pay each year.
Yeah.
Right. For any of your policies, whether it's your auto, your home.
And it might be $1,200 a year. You're paying $100 a month. Essentially.
But in all honesty, I mean, I would say it's stayed pretty consistent. The price of a homeowner's policy hasn't drastically shot up or anything like that. I'd say it's stayed pretty consistent. Since we've been working together, everything, a new homeowner, I would say they're usually between $900 to maybe like $1,500 per year for a home policy. Mm-hmm. I mean, on average, a lot of times what I see.
Okay.
But yeah, I wouldn't say it's taken a drastic change in like the commercial space. premiums have doubled in a lot of spots in different states. Florida, for instance, a lot of companies have gone insolvent. They've moved out of the state of Florida. Florida's not writing a lot of property, and it's a nightmare in some states. But here in Michigan, I would say we'd stayed pretty consistent.
Okay.
Yeah.
It helps that we don't have hurricanes.
It does help that we don't have a lot of that kind of stuff. But yeah, I haven't really noticed, anything drastic. And you can offset a lot of stuff too, with deductibles and whatnot. And you can shop just like, a lot of lenders can. It really hasn't changed too much.
Yeah.
Well, one of the biggest issues that they're having in Florida, because I originate in Florida and we're running into this more and more, and this is something new within the past couple of months for us. The problem is these insurance companies will only issue a cost to rebuild. First and foremost, I think the state made it illegal for us to actually get like a cost estimate per se, right? We're not supposed to actually know what the insurance per se covers. Yeah. The main issue is that real estate in Florida right now is going for more money than what they have for an actual replacement cost.
Oh, gosh.
So let's just say you're buying an $800,000 home and you're putting 20% down. Okay. So that's $160,000 down payment. You're financing $640,000 on a loan. Okay. Yeah. The problem is that the replacement cost to rebuild this home, the way it's being written on the insurance policy, maybe it's only $500,000. The reason why is because there's so much value in the land. Okay. And as you're providing a mortgage to somebody, we have to make sure that the amount that we are ultimately allowing you to finance is at least covered. And we're running into issues there.
Okay.
And there's new legislature in the state of Florida that does not allow these insurance agents to send us like this estimate on what the actual home covers, and they won't guarantee full replacement either. So it's kind of this weird thing that Florida has going on. I'm sure there's other states. We're just licensed in Florida, so we see it there.
Sure.
Thank God in Michigan, we don't have that problem.
Yeah.
But yeah, Florida is one of those states that is absolutely blown up. And just like you said, use California as a reference. I think Florida is being occupied not only by people from California, but a lot of people on the East Coast, your New Yorkers, New Jersey, some of the higher price dollar states. Because when COVID hit and everybody was ultimately forced to work from home, there's a lot of financial institutions, whatever businesses that have kept the work from home program.
Yeah. Yep.
So now people are able to go, well, if I'm working from home or I'm working remotely, I can do all the same thing. Why in the hell do I want to be in New York where the cost of living is so much? And, the price to commute from here to here is so expensive. Like, why would I not be in a place like Florida?
No state income tax.
And no state income tax. Yeah.
Not to mention that's where most of retirees from Michigan, right, are Florida bound.
Yeah.
I mean, we actually have a term I think we call there's
snowbirds.
Like snowbirds. Exactly.
Yep. Yep.
So it's a crazy time. I think that real estate in the state of Florida, quite frankly, has been underpriced for a long amount of time.
Mm-hmm.
I don't really see that coming down anytime soon.
Yeah.
I do. The loans in Marco Island, these people are buying $2+ million homes. They're teardowns. They're buying it for the property on the canal because you can't get it any other way.
And then they're tearing it down and rebuilding a whole new house.
Yep. It's weird to think that I was looking in Marco Island a little over 2 years ago at properties, and you could buy a place on the canal for under $1 million. I mean, a really nice place.
Yep.
And now you can't buy a teardown for $2 million.
Yeah. That's wild. That's crazy. So it's always funny sitting in the room with you because you have the ability to just really both of you guys to just rattle off these numbers like, oh yeah, 800,000. That's about 20%. Is about $160,000. I'm sitting here like,
it's only when James talks. It really captivates me too. Sometimes I forget I'm on a podcast.
Yeah.
I'm just like, oh wow.
I go out to breakfast and I'm writing a tip and I'm like, I gotta get 20% on here.
Right.
I got my calculator out. All right, that's exactly what I need.
Yep. I can talk to that girl all day long and convince her to buy a house with me, but you tell her I try to calculate 10% of the tip.
Business
I'm lost.
Math, just business math, algebra. No.
I'm lost. Yeah. But no, it honestly, it makes me look at it and go like, I'm thankful for you guys. Like I'm you know what I mean? There's an aspect that you guys consistently bring to the table. Hopefully there's one that I bring to the table too.
Sure.
That makes this environment, makes what it is that we're doing here, makes a transaction of taking somebody who knows nothing about a home, nothing about the ins and outs of a home, the mechanicals of a home, let alone the insuring of those mechanicals, the insuring of the foundation, the aspect of having to pay for all of these things. How do I do this? I don't have $250,000 sitting in my bank account. What do I need to do? What do you need from me? Which is why I'm so thankful having you guys on today. And this is just, quite honestly, for everybody watching, this is just a glimpse of some of the people that we get to run with on a daily basis and learn from and grow with. This is part of the team. When you purchase a home here at MACkED Associates, or if you're looking to refinance, or if maybe you're looking for a real estate agent and you're in the process of, working with James and his team over on the Taveggia team, or you talk to Dom and they put you in contact with one of us, like, this is who you're working with. You're not just working with some guy in a room. You're working with really a solid team of professionals that go out of their way to not just get the deal done, not just get you to the closing table so that you buy a house, or so that you refinance, or so that you get a better rate with your insurance, but really you're working with people who want to put you first, who want to go above and beyond and put you in a position where, oh my gosh, that customer service experience was absolutely incredible. And that would not be possible if not for the people sitting in this room who have such a similar mindset that I need to not matter as much as the person who I'm taking care of. And that's what really, really gets me fired up. So let's, if you don't mind, I know it might be off topic even, let's sit on that for a minute. Like when you're in the process as a loan officer or as an insurance agent, and this is me truly asking as a realtor, who is it that you're looking to work with? I've sat down with loan officers and I've talked to them, and I'm like, I am never sending you business ever. It's not going to happen. Like, I don't say this to them because that'd be rude, but I shut it down. Right. Mm-hmm. I'm looking for something specific. I'm looking for an agent or a loan officer specifically to provide the customer service like you guys are talking about. What is it that you guys are looking for in a realtor? What is it that you're looking for in an insurance agent? And vice versa? I'd love to go down that road here for a minute.
So if I'm going to comment on this, honestly, I think it's the most important part of the entire process is picking the professional that you're going to work with, because you could type in loan officer Rochester, and I mean, there's hundreds of us, right? There's several different loan officers to pick from. We may have all of the same title, but we certainly don't operate the same way.
Nope.
When I sit down with a real estate professional, to me, the most important thing is everybody has to start somewhere. So even if you've only been on the job for a week, right? You were there at one point in time in your career. I was there at one point in time in my career. We all were. So I do think tenure definitely helps. But when I look for a partner, it's somebody that wants to do right by the client, somebody that acts with integrity, and somebody that's not looking to cut corners.
Sure.
I have busted my tail my entire career doing things the right way. Have I made mistakes? Plenty, man. I am not perfect. I am human just like you are. But the one thing that I do take pride in, especially the earlier years, because now I'm kind of, I don't have many scales from the armor, I guess you could say, that are missing. I've learned enough over the past 18 years that I don't make mistakes very often, but I was always very focused when I did something wrong to learn from that mistake so that it never happened again. Sure. Right. And I think that's part of the evolution of a loan officer, a real estate agent, any kind of a professional, right? Experience first and foremost is going to teach you the most valuable lessons that you have. But there's a lot of people out there, quite frankly, that don't do things the right way. I will never hand cash over to a real estate agent in an envelope because, number one, it's illegal, it's unethical. Number two, it's a RESPA violation. They could take my license away forever.
Sure.
I happen to know there's lots of loan officers and agents that operate that way. I will never work with a real estate agent that expects something like that for myself or my team. It's just not the right thing to do. How can we benefit each other? By working with each other to provide the best client experience for the client themselves.
100%.
And at 100%. The end of the day, this is really important too. And I'm not trying to hijack this because
no, this is good. This is why I asked it. This is good.
I think that when a client is out there, I think for the most part, people are programmed. What is the lowest rate? What are your costs? Those are the very first questions that a client asks. Mm-hmm. I think it's very important to be competitive. So I'm not taking that aspect out of it. Right. But if you are looking for the lowest rate and the lowest cost basis, you're going to find it, but you're going to suffer in the form of service, value. I mean, I think Warren Buffett said it best. Price is what you pay, value is what you get. Mm-hmm. I might be an eighth of a point higher in rate than, Joe Smith Mortgage that's advertising some crazy interest rate online, but I also have an NMLS that starts with a 23433, right? I've been doing this. What that signifies is the low number means I've been doing this for a very, very long time. And in anything we do, I'll use a physician as a comparison. Let's just say that you have to go out and you have to get heart surgery and it's life or death. Are you going to go with the very first cardiologist you speak with? Probably not. If it's your life on the line, you're going to have a handful of conversations. Yep. I'm not going with the cheapest procedure. I want to live.
Yep.
Maybe that's not fair to compare to mortgage. We're not necessarily talking life and death, but sometimes it feels that way when you're in that process, right?
Sure.
When you decide to go with that loan officer purely based on price, that might be the only benefit that you get at the end of the day, because I've done a lot of loans for clients that ultimately decided to go a different route and something ended up going terribly astray, whether it be halfway through, at the end. And at the end of the day, sometimes we're able to repair that, fix that relationship and get them to the closing table. Sometimes it's too late. Well, in this market, you don't really get the chance at second opportunities. Yeah. That seller is not going to give you an extra 30 to 35 days to start this all over again, because if it's a hot property, the chances they've already got a backup cash offer in the time period that they've waited for that lender to screw that deal up is pretty high.
Yep.
So you only get one real chance for the most part to make it right. The point is, check out people's reputation. What are their clients saying about them? You should be looking at their reviews. You should be looking at their tenure. You should be listening to what they say other than just rate and cost, is my point. Mm-hmm. There's a lot more to this than, hey, I'm just going to go out, talk to 5 lenders and find the lowest rate and cost.
Yep.
Once again, I do think it's important to be competitive. We are very competitive. I'm never going to be the cheapest price guy in town. And quite frankly, I don't work with the cheapest price person in town either. I do my due diligence. If I'm buying something from Amazon, I'm comparing, I'm looking at what clients, say at the end of the day, and I might pay a premium for a product that I feel is worth that premium. I think that you should be looking at professionals in our industry at the same time. Just like you're not going to list a home at a percentage off, right? Because you are dedicating a percentage of your time to make sure that goes flawlessly. You're worth your percentage.
Right.
And I think too many clients think, oh, it's so easy. I could just put this up on the market on my own. Yeah. Until you find out that you've got some kind of a weird mechanics lien, or the appraisal goes awkwardly low, or you ultimately are faced with a situation where you're not a professional in that industry and you don't know how to react or how to act on your behalf in the best interest for yourself.
For sure.
I think that with the right professional, they pay their weight in gold plus. I really do believe that.
For sure. So to hit on that really quick, and then I want to hear from you guys. I sat down with somebody the other day. So for everybody that knows, the average just across the board here in Michigan when it comes to a commission is 6% if you're listing a home. And I sat down with somebody the other day and they said, are you open to cutting your commission? Just to give you an idea on how this works. A buyer represents, an agent represents the purchaser, an agent represents the seller. Typically, that's how it goes. It's 90% of transactions. Let's pretend that that's the case. And I cut my commission and I say 5% or 4%, which is what a lot of real estate agents do just to get going, right? What ends up happening is you've got 3%. Right off the rip, usually the broker takes about 1% of that. So now you're sitting there with 2%. Then the leftover is split between two things: marketing and the agent being paid. Let's say 1% is the agent being paid. The one thing now, as you as a seller, by cutting the commission, you paying less, you are cutting out your ability or the agent's finances to market your home, right? Like agents that go in and they just list homes, they have a tendency to sell less homes. It's just is what you see. And the reason for that is because the broker's not going to take less if you cut your commission. They never do. They got to be paid. It's the way that it would exist. The agent's not going to be paid less if they end up cutting their commission. The one thing that ends up getting cut is the marketing on your house. And so they don't market the house as well. They don't get the professional photos taken. They don't get the video walkthrough. They don't get the social media outlets that they should when it comes to marketing houses online. They don't do any of that stuff.
Which is absolutely mandatory in today's day and age.
It has to be, man.
Because every good agent out there is doing the same. I mean, they're literally hiring people with drones to go out and do aerial views of homes. Like, if you want to be competitive and you want to stand out, especially when you get into that luxury market,
for sure,
you have to have the resources.
For sure.
At the end of the day, that stuff is not free. I mean, I know I'm married to a real estate agent. She complains about it all the time when people ask for commission reductions, because it's like, well, okay, sure, we'll go by that route, but this is how it's going to change up your plan. And you're going to miss out on potential buyers that maybe do cover that difference that you're trying to save so desperately.
Yep.
And we're a direct lender too. So when you get, if you're charging 6% for us for being a direct lender, we're not getting paid off of the percentage of the rate that we're handing down. We don't get paid off of percentages of the rate, fees like in that manner. We're not a broker. We're a direct lender right through Fannie and Freddie. That's who insure our mortgages. So when James says, if we are eighth of a point higher, we don't get that money that you're being charged for that rate. We get paid off of a loan amount, but you're also getting the vehicle. You're getting the absolute best service on top of that. But, just for instance, we use an appraisal panel. We don't use a third party AMC. So if you have a house in Shelby Township, we're not hiring some guy out in Romulus to come up here that's not familiar with the area that might underappraise your home. It's going to be somebody from this township, somebody from the county that knows exactly what they're getting, where a lot of these other lenders, they use a third party AMC. Yep. And your rate might be a little bit lower. Maybe your fees might be the same, or actually they're usually higher. Either way though, well, if you don't get the house because it's underappraised, what's even the difference of having that, eighth of a percent lower? Yeah,
that's the cold hearted conversation you have to have with everybody. At the end of the day, if this loan doesn't close, that rate doesn't really mean anything.
Right.
Neither does a cost basis.
For sure. Yeah. You guys over on the insurance side, I know we're coming to you last, but you guys might be the most important piece of this whole. You're the one who's helping and staying in contact with the client on a regular basis.
Well, I think kind of to James's point, there is the price, but there's the value piece too. And I've talked to more than enough people to realize that a lot of them really do only shop on price, right? There's a million different companies they can shop around every year if they wanted to. But I do run into people that have had absolutely horrible experiences with certain companies. And two, back to cutting corners, you could do whatever you want to an insurance policy and, basically gut the thing and somebody won't pay anything, each year. For me, though, I don't want to have that conversation where, something happens at the house and I'm like, hey, well, we cut those corners earlier so that you could save a couple bucks, and then I'm the bad guy. So, one of the first things I always tell people is, I'm going to shop the market. I'm going to, try to find you the best price, but I'm also going to present something to you that I think is going to make sense for your situation. If you had 4 or 5 cars and you got, 4 people in the family and you got a big house, I'm pretty sure anybody would want to make sure if one of their kids got in a vehicle and hit and injured somebody that
they were covered.
They were covered, and that's just and I get that a lot of people, I never have to use this kind of stuff.
Until you do.
Yeah. So, really a big thing, just like with you guys is educating them. And then also, really presenting and educating them with the value of each product, regardless of each carrier.
Mm-hmm.
When I got to talk to, my whole goal in the, being an insurance agent is to insure somebody for as long as I can. And the only way I know how to do that and go to sleep at night feeling comfortable is making sure that I set them up with something, if something bad happens, they're going to be
taken care of.
Yeah. Exactly.
Yep.
I've always worked with a broker too, because you have somebody that's
an insurance broker you're referring to.
Precisely.
Right.
Because now you have an advocate for you that ultimately acts as like the interface between you and the actual insurance company.
Yeah.
And so it is just like he's saying, there are a lot of companies out there, and I don't know the ins and outs per se. I've just heard the horror stories, but there are insurance companies that these guys are going to know and have immediate access to in their mind from experience that are tougher to get insurance claims processed through than others.
Yeah.
And at the end of the day, the funny thing about insurance companies is none of them actually want to pay out for what you're paying for, right? They're an insurance company that's being hired in the event that something terrible happens.
Yeah.
I'm paying you a monthly or annual premium so that if the unthinkable happens, I'm covered. Well, if you're not with the right insurance company, what does it matter what your premium is? Because if, God forbid you have a flood in the basement or windstorm, blows off a portion of the roof that can't be reused. These aren't like you can't go out there and fix it yourself. You need professionals. It's going to be a costly thing. And you better damn well hope that the difference of the $200 that you save per year for insurance is with a company that's going to cover the $20,000 to $30,000 roof that needs to be replaced.
For sure. Yeah. I ran into that recently. because I have my insurance through you guys, ran into that exact same issue.
Yeah.
My entire roof was replaced, and the gutters. They replaced the gutters on my roof too, because they added the extra coverage, which I didn't even know about. But to hit even closer to home, we talked about this recently, you and I. I have a friend who had an issue with their sewer line, right?
Yeah.
And I came to you and was like, hey, dude, this is what's going on. I want you to reach out to her, have a conversation about this. And I'm bringing this up because Royal Oak, St. Clair Shores, Ferndale, Allen Park, all these areas that have older homes have clay tile piping running out to the sewer lines. They have a tendency to break. They have a tendency to fall apart. I didn't even realize there are options and coverages that exist within a homeowner's policy. I don't want to go too far down the road that exist for homeowners. Do you want to hit on that really quick? Just because I think it'd be important for people to hear.
Yeah. And you know, really, since I've been doing this, there's what's called service line coverage. And it's basically for any of the utility lines that run under the ground. Well, a lot of companies have been adding this coverage in, and you know, when I first started, it wasn't something that I could just click on and add. It might have been something that wasn't excluded in your policy, but now there's specific coverage for it. So, you know, with utility lines getting older, you know, you might see any utility company out and about. They're spray painting lines, you know, marking the gas lines, marking the sewer lines, and they're digging stuff up. Well, if they sever one of those lines and it's on your property, you're technically on the hook for it, is what I've gathered. So companies have been basically adding an endorsement, or
like a rider, almost
a rider, you know, rider endorsement. You can add this coverage to your policy to make sure that if something like that did happen, or let's say a tree root, you know, grows into
a sewer line,
one of the sewer lines, something like that, which one of his clients that was happening, and they have a carrier, and she's not positive if it's covered or anything like that. And this kind of goes back to, you want somebody that can, you know, you can review your policies with, first and foremost, because insurance, and especially insurance agents, the statistic, and we always kind of go over this, the average insurance agent is around 55 years old right now. Not many younger people. But with that being said, a lot of these agents they've built up their books. Are you reviewing all your stuff with them every year? I mean, if you have a big book of business, you know, a lot of agents, they're not going to go through everything. It's going to take a phone call from like this individual that called into their agent, and they don't know if it's covered or not. So what I told her to do is I said, hey, you really got to figure out if this is a covered thing, because she's having an issue, and I can't bring her on to another company if there's an issue, because they might go back and say, hey, like
pre-existing conditions.
It's a pre-existing thing. And, you know, and people do try to do that, right? They try to get out from a company and get in somewhere else. It's just like anything. But that's why it's very important to review these things, because in the industry, there's always stuff's getting older in this country. So you want to make sure that, you know, you're adding the riders and the endorsements that you need to add, because insurance companies really aren't in the business of covering wear and tear. You know, everything has a shelf life to it, you know, and it has to be a covered claim. So you want to make sure those things are covered, or at least you're bringing them up.
For sure.
You know, long story short.
One of the things that you said, though, I came in your office and knocked on the door. It was like 8:30 in the morning. And I was like, hey, I got a question for you. Here's what's going on. Here's the deal. And one of the things that you said to me, which I was very impressed by, and this is the reason why I so heavily endorse ROIG, is you said, that's actually a rider that we put on every homeowner policy that we write, because of where we live, because of the age of some of the pipes that exist within our state. And if they choose to remove it to save cost, we're willing to do that. But there's something that they have to sign stating that they refused this coverage from us.
Well, you know, it goes back to probably the most common is the water backup coverage in your house. You know, you got a finished basement, you know, and it's funny because you come across this, you know, more than you think, but people have finished basements, man caves, yada, 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 with a lot of money invested.
$2,500 in coverage.
With $2,500 in coverage. And, you know, you have this conversation with them, and some people, they're like, hey, I've never had a claim. I don't want to pay the extra $200 per year to maybe get it up to 20,000 or something like that. That's fine. You know, I can, you know, try to educate them as much as I want, but at the end of the day, you know, it's up to the consumer. And if they don't want to purchase it, then that's fine, but just acknowledge, we're going to have you sign this, acknowledge. But that's probably one of the biggest things around here is the water backup coverage. And that's, I don't want to get that confused. It's not a flood. You know, if we had
sump pump fails.
Yeah. Your sump pump fails and that water backflows through the drain in the basement, or, you know, comes out of the sump pump and whatnot. So it's stuff like that. But, you know, we just try to really educate anybody we can. And that is one coverage. We're seeing it more and more. You know, you got to add it. You just have to. If it comes down to price, you know, I'd rather them go somewhere else because I don't want to be on the hook. Yeah. You know? Yeah. And, you know, so yeah.
The goal is really to take care of you, not just
we're ROIG. We're very big on value. You know, I'm like I said, we're not always going to have the cheapest thing, but you're going to be protected correctly.
Right.
Well, it all goes back in really to the topic that this was started on, is choosing the professional that ultimately knows their craft, that knows their business. And the problem is most clients wouldn't know how to look at an insurance policy that's been written up and understand what all of the different line items are and what they cover. Right. But at the end of the day, it's a very real thing. There are agents out there, okay, that knowingly take a coverage away. To make their policy seem more competitive and better.
Yeah. And to get the client.
Exactly.
To get the sale.
So your annual premium is cheaper than the next guy's, but you don't have the same type of sufficient coverage that you otherwise had with the true professional that knows exactly what they're doing and is picking the insurance lines that are applicable for the home that you're buying specific to your situation. And that's what I mean. I think in as long as, you know, human beings have existed, right? There's a right way to do thing and there's a wrong way to do thing. And I think that true professionals, I mean, at least I do, and most of the people that I associate myself with, you're doing right by the client. It's not focused around all of the things that clients would necessarily like it to be focused around, I guess, because sometimes having the cheapest policy in insurance is the worst thing you could possibly ask for. Once again, if you ask for the cheapest policy, you'll get it. You could talk to 10 different insurance agents. Eventually someone's going to be a winner, but I'd like to even see what that looks like, right? Like use one of us as a test subject. I'll have him put together like a proper insurance policy, quote it out against 9 other people, and see how watered down that gets by the last time you get a quote.
Yeah, that'd be interesting to do. We should try this. This would be a whole nother podcast.
You know, I've worked with James on the company that James is with. We do not represent right now, but I've told this to you a few different times. You know, you're with a great company. All the coverage is good. I'm not gonna try, like, if I can't compete with something that is comparable and I agree with the coverage, then I'll just say, hey, like, we'll look at it. We'll look at it at renewal. I don't want to put somebody in a spot I don't want to gut a policy to win somebody over.
It's a fair point.
You know,
he's right. He looked at our coverage and just said, honestly, you guys are in a good spot with a good company. I would stick right where you're at.
Yeah. And he very easily could have done everything that he could.
I would have trusted him.
Yeah.
And it goes back to, you know, that's just what our values are here. And, you know, if you want the cheapest price, then you'll end up finding it, you know, just like James said. So,
for sure. I love it. This was I'm very happy that you guys came in. I'm very thankful for you guys. We'll have to have you on again. In the meantime, though, if somebody's looking to, or in the process, let's say, of purchasing, or they're looking to refinance, potentially purchase another home out of state in Florida, let's say, how would they get in contact with you guys?
So we're all over the net. Team Taveggia, TAVEGGIA.com. Every one of my members is a part of the webpage. We have our bios. All the communication is there. We work for Caliber Home Loans.
Just out of Rochester Hills, Michigan.
Downtown Rochester, essentially.
Teams licensed in Michigan, Ohio, Illinois, Florida, California.
Okay.
So absolutely. Right, and even just to have a simple phone conversation, I think people are apprehensive. Like, reach out, talk to us, talk to people before you make that final decision. all too many times people, I think that we're just creatures of habit, right? If you do all your stuff at this particular bank, it just makes sense. These are where all my deposits are. Right. These are where my credit cards are. This is where my car loan is. This is where I'm going to get my mortgage. Well, I'm not going to slander any individual bank, but I'm going to tell you there's a lot out there that not only, aren't comparative to us pricing wise, we're actually much more competitively priced than they are. But there's a lot of potential issues that you could have. You could be a homeowner that goes through your local bank and you could have zero issues.
Yeah.
Or you could be like a lot of people we picked up off the ground and ultimately thought buying a home was the absolute worst idea in the world that you had until you actually talked to us.
Sure.
Yeah.
There are clients that walk into their bank that are told to come back in a year. We just don't have the ability to qualify you, that could have walked out of our office the same day with a very, very different approach and approval letter.
Yeah.
So,
and that goes to the fact we're referral based. We don't get paid a salary. We're not sitting at a bank. We're not anything like that where we get a guaranteed check every single month. We actually care for our clients. We're referral based. Good people know good people. So, which is obviously how we met you guys. But yeah, we take care of everybody because we know that we're going to get that review and referral based, no salary.
We have 600 reviews in the past 2.5 years alone.
That's a lot of reviews.
That's a ridiculous amount of reviews to have in 2.5 years. So
yeah,
I always try to point people to that type of thing because they're actual clients we've worked with. Like if you really want to get to know something about a particular organization or a person, and you know what, start with the bad ones.
Yep.
Take a look because there's we can't all be perfect. Not every transaction goes 100% as planned, but if you take a look at our bad ones, there's
some of them are pretty funny. Like they're just totally irrelevant, but it is what it is.
Right, wrong, and different.
Yeah.
There's only a couple of them.
Yeah.
There's a whole lot of good ones out there. And I just challenge you to make sure that any professional, quite frankly, that you're speaking with, do your due diligence because it is a very stressful situation. Enough as it is, you don't want to add any more stress on.
For sure.
Insurance, real estate agents, loan officers, all aspects of what we do. It's extremely important that you pick a professional that is looking out for your best interests, not a paycheck. The money always seems to be there at the end of the month when you do things the right way. That's it. If you constantly do things the right way, you'll have a good reputation. You'll get referral-based business, and that goes for anybody in any kind of service industry.
I love it. I love it. Again, so thankful for having you guys on.
Thanks for having us.
We got to have you back on here another time. This is awesome.
Yeah.
Thank you for joining us with our this episode of MACkED the Podcast, and we will catch you guys next time on MACkED the Podcast. You guys have a blessed day. See ya.